Let's turn to oil, tumbling today after the Washington Post reported that Israel will not target Iran's crude output. Joining us now, we want to bring in Patrick Haan. He's head of petroleum analysis at GasBuddy. And Patrick, it's great to see you. So yes, we had the report out from the Washington Post that really is moving the markets. But then we also had the supply report yesterday, or demand report, I should say. And that is also, I think, grabbing investors' attention here. What was your big takeaway from the IEA report, and maybe how that sets us up going into the end of the year?
Yeah, certainly a little bit of weakness now creeping back into oil markets after that report. I think the U.S. maybe influenced Israel in avoiding oil infrastructure if they do target Iran. And now we have not only OPEC yesterday, downward revision with their forecast for 2024 and 2025, but now IEA also joining in. And look, there's a lot of economic weakness out there. I mean, the Chinese economy essentially on life support, fiscal stimulus has not worked there. Oil demand being revised down just about everywhere. And with China's economy kind of down for the count and inability to revive it, I think oil prices, you're seeing a sell-off because it represents the reality of potentially Israel not attacking Iran's oil infrastructure, two downward revisions in oil demand forecasts, economic outlooks that are a little bit slow. Look at Germany's economy now tipping into recession. So there's a little bit of weakness out there. And this is the time of year when you tend to see these things happening, when oil demand is going down seasonally. And then you have all of these other things happening at the same time. Oil prices likely will continue struggling here in the weeks ahead.
And so for the typical kind of annexation that we have to the word oil and plummeting and putting those together, anytime you put plummet after something, it feels like, okay, that sounds bad. But the oil price is coming down at a time where there will be more seasonal demand, typically because of travel and whatnot. Is that a net good thing for the inflationary picture?
Well, it certainly is. I think it gives us potential of seeing the U.S. national average falling below $3 a gallon for the first time since 2021. And look at the price of diesel, by the way, which powers much of the American economy, whether it's construction, whether it's purchase of goods, trains, semis. A lot of the biggest commerce uses are diesel, and diesel prices are at their lowest level since 2021 already. So it's very good for the disinflation story. We're getting a little worried last week after Iran launched attacks on Israel. Oil prices quickly jumped $10 a barrel, but they've given up just about 80% to 90% of those gains now as we come back down. And I think there is the potential that the national average could dip below that $3 a gallon mark potentially before Election Day. And keep in mind, a lot of voters are very aware of what gas prices are. In fact, even Georgia issuing another gas tax holiday. It's very timely here as Americans head to the polls that gas prices are declining.
And so with all of this in mind, the EIA is seeing a sizable surplus, they called it, in the oil market. And so with that in mind, how do you expect that to really play out over an extended period of time, even for the advanced purchase orders, if we do have a sizable surplus like the IEA is expecting?
Well, I think it's going to put more downward pressure on oil. Look at the month-ahead contract as well. There's a lot of backwardation happening because there is the promise still of OPEC restoring some of its oil production. And that is a conversation that we'll probably see come into the limelight here in the weeks ahead as we move towards OPEC's annual meeting. Whether or not they restore that production, at what clip? Will the economic weakness persist? Will the U.S. economy kind of be the bellwether for the global economy? There's a lot to discuss, but I think the overall future of oil prices is a bit of weakness. Now, depending on the election, too. And keep in mind, there are some political issues that could get things going. Donald Trump has promised tariffs on oil, potentially from Canada, or broad tariffs. So there's a lot here to pick up. But I think overall right now, it's a bit of a bearish outlook for oil, given China's economy and given Middle East tensions aren't escalating at this moment.
Patrick Haan of GasBuddy, thanks so much for taking the time here with us today. Always a great pleasure to get some insights from you, Pat.
Thanks for having me.
Certainly.